Bitcoin, again, guys, is very simple here. So Bitcoin, again, has broken the level I said it was likely going to break. We talked about this. You guys, it's been no surprise that when we were at 31,000, I was skeptical we were going to break out, unlike pretty much everyone else out there. But now we've fallen back down. Now the question is, here's your next support level, right? So looking at supports, we have a very clear $25,000 support, very clear 20,000 support. And if we break that, eventually you go back to the lows. The only way, and I've said this now, and this has become my thesis, is the only way Bitcoin breaks 15,700-ish, the lows, is if we see the stock market go back to the October 2022 lows or lower. Then I actually think it can. Otherwise, I think Bitcoin probably holds up relatively well. My big concern, though, is that I actually do believe the stock market is going lower significantly, as I think this narrative that it's going to be a perfect landing and everything is going to be great and we're going to all sing kumbaya, I just don't buy it. Again, history shows us that when the yield curve uninverts is when we get the recession. We haven't uninverted yet, so there's still a lot of things. We also know that there's a delay in interest rate policy of 6 to 12 months. So we're only, based on what the market's reacting to, we're at like 2.5% on the Fed funds rate versus 5.25 to 5.5. So there's some big differences there.
Bitcoin is giving plenty of longtime market participants reason to forecast a return to its previous cycle's $20,000 all-time high, or worse. With investors continuing to warily eye the ever-changing economic situation, the way forward remains unclear. Will the U.S. experience a hard landing, a soft landing, or does the status quo persist? We look at the prospects for recession and assess Bitcoin's role in investor portfolios. Gareth Soloway gives us his view on the next Fed move and how it will impact the U.S. economy and the crypto market. So let's get started with the video.
The 10-year yield is very important this week because Jackson Hole is this week. Jackson Hole is the meeting in Wyoming of the Federal Reserve board members, basically. And what we can see here, and I have to bring this off here, let's bring that up. So here is your 10-year yield. Now, what I'm watching really closely on the 10-year is this high from October. And if we drag this out, you basically kissed it on Thursday, right here. You pulled back, and now you're pushing back up. If the 10-year yield breaks above 4.33%, the markets really should start to sell. Remember, when you were over here, okay, when we were over here, this is where the markets were selling off into October. They bottomed in October when the yield topped out. So the thought process is we have come off of our highs in the S&P, but the concept would be is that if you're going to break above here, at some point that pressure on yields is going to make money start to flee stocks. Right? We've had this big chase for returns. Bonds, honestly, as crazy as it is, bonds are very disliked right now, even though they're paying such a high level, because people, again, are looking at stocks and saying, wow, I got to be in the stock market. You know, this is where the big money's being made. I think that changes. I think that as yields go up, smart money, which again generally is institutional money or billionaires, they're going to start to say, hey, listen, the 10 years now paying X amount, I'm going to take some of that money out of the risk of a policy failure by the Federal Reserve, which could cause a recession and a market collapse, and move it into the bond market. So again, watch this level 4.33. Look for the S&P to start selling off if we get through that level. Okay. Next up, I want to go to a couple other charts here. I want to quickly look at the dollar. The dollar is into technical resistance here. Take a look at this chart right here. I'm going to zoom in a little bit. This is a big level on the dollar. Okay, you have a very clear pivot point here, right? Trend line, trend line. Not sure what happened there, but that's okay. We'll bring it over here, bring that back. So again, we're looking at, basically we have a level here and a level here. All right, so we're right up against resistance on the U.S. dollar. Now, the best thing for markets in the near term is the dollar to pull back. That should help asset prices. All right, if it doesn't and you break above, short term, that could be a negative. It could also insinuate that we're seeing people flee foreign markets like Japan, which we know the yield curve control issues there, the dollar yen. China is a mess, obviously. Europe's not doing so great. It would tell us that, again, if we break up, that the U.S. is really still the game in town in terms of the dollar. So watch for that. We're right at a pivotal level. Now, I want to point something out. The yield is at a pivotal level. The dollar is at a pivotal level. All right, these are major things. In fact, gold's at a pivotal level too. Think about what we're coming into this week. Jackson Hole on Friday at 10:05 a.m. Eastern Time, a Jerome Powell major speech. Now, this speech is important because it's going to guide the markets whether Jerome Powell is going to hike in the next couple of meetings or he's going to be on the sidelines. And that's why this speech is so important because, remember, we got the minutes last week. They were very, very hawkish. So he's going to get a chance to guide us to what the rates will do. That will affect the dollar. That'll affect yields. That'll affect gold, silver, the stock market, maybe even crypto a little bit. So keep that on your radar.
Data from Cointelegraph Markets Pro and TradingView showed an eerie calm covering BTC USD over the weekend, with the market down 11% in 7 days. Sharp drop in Bitcoin was kicked off by report that Musk's SpaceX sold crypto holdings, but sustained by wider factors. Analysts say a sudden drop in Bitcoin and other cryptocurrencies that began late last week was a reaction to broader sell-off pressures for riskier assets, analysts said. The drop, which followed more than a month of unusual stability for Bitcoin, was also due to ongoing regulatory pressures, according to industry watchers. Last week, the Wall Street Journal reported that Elon Musk aerospace firm SpaceX had written down the value of its Bitcoin holdings by $373 and had then sold its holdings. Some analysts said the report had helped spur the crypto sell-off, with eToro global market strategist Ben Laidler saying it was the immediate catalyst. But Laidler said the main driver was a broader economic pressure pushing investors to sell all kinds of riskier assets. While the dip might appear sudden, it was precipitated by a combination of events that contributed to the decline, wrote James Butterfill, head of research at digital assets investment firm CoinShares, in a note. Bitcoin is nevertheless continuing to trade substantially higher this year after large drops in 2022 due to the failure of exchange FTX and a number of other high-profile crypto firms.
All right, so I'm in Litecoin. I want to show you a trend line here that's pretty remarkable. All right, if we zoom out on Litecoin here, what we can see is that, bear with me as I go to the weekly chart, all right, we can see that we basically have a pivot point here to here, and I think I can see this better on the daily chart. Trying to remember exactly what I was looking at. But if we zoom out here, there we go. If we take this low and we connect it to this low here, so the lowest point to the lowest point, look at what it gives us on Litecoin. Look at that. Right to that point. So again, to me, Litecoin gets interesting in this range. All right, it's already started to bounce a little bit. I think it heads back towards this level right here. $70, maybe a little bit higher. I think maybe it even gets back to 80, but somewhere in that vicinity, I think it's likely going to be headed back to. Okay? So that's, again, just something to keep an eye on. Now, a couple other of these charts, let's erase that line, and let's go to a couple of the other altcoins. If we look at Matic, okay, and I'm going to still go over gold and everything, so don't worry. All right, so Matic is in trouble as well, but same kind of deal. Look at this low to this low, and look at where we are on Matic. We're right above this level here. So, by the way, do I think the bottom is in on all coins? No. All coins are going to go lower. But do I think there's a swing trade bounce in this vicinity? Yeah, I wouldn't be surprised if there is. Again, the way I trade, I start small, so I can add if it goes lower until we get that bounce. And again, that has worked very, very well. I think 96% success rate in verified investing crypto. Gold is at a very pivotal level. And again, I say that because it has now retraced. We can see the trend line, right? So from that high there to here, we broke out, we hit it here, and we hit it here. My guess is, and you're already starting to rally on gold, I think gold is going to end up coming up, hitting here, eventually breaking even out to the upside, the all-time highs. So again, interesting stuff in the markets, guys. Again, the big things, again, we talked about, obviously, NVIDIA being the big factor this week. We know that Jackson Hole is, but also keep an eye on gold, keep an eye on the altcoins. Bitcoin has support at 25,000, not far away at this point. And also Jackson Hole, as I mentioned, Jerome Powell's.
So, what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.